So how do we start? Where do we start the process? Well, we start with unemployment. First, a lot of my clients are embarrassed to claim unemployment. There's no reason why you should be. You paid into it, you earned it, file for it. When should you? Immediately. Now, that doesn't mean you're going to receive it immediately, but at least things will be in motion. They won't be missed payments. So, what I mean by that is if you received a lump sum, you're more likely to receive unemployment sooner, but everything revolves around what your severance agreement says. But if you're receiving over a few months, you're likely not to receive unemployment until that agreement runs out. But so in this situation, you file, you get rejected, but you're able to file once you're ready and they have all your information because they need your severance agreement, all the other information. So you don't want any delays there. So at least they have all the information for whenever you're ready. The next part is to get organized. This is the most obvious, but the most painful because this is where a lot of the anxiety comes in of saying, oh my goodness, I've got to make up X amount of dollars. Where is that going to come from? So how you do this, you look at your assets that you can touch. So that could be your brokerage account, your emergency savings. It could be a home equity loan. There's different ways that you can generate money. But on the expenses side, I would recommend three options. So there's one, you can use a budgeting software. Two, if you're comfortable with Excel and AI, you can export your expenses to AI and have them organize it. So Gemini or ChatGPT. The third one would be look at your after-tax income and then look at it again after tax. So after your taxes, your deductions, your medical, and how much income you have. And then you can back into your expenses that way. So whatever way makes sense to you is the way you should do it. There's no right or wrong. It's just as long as you understand the amount of money you need month to month. And then from there, you build what's called a cash flow bridge. What that is that hypothetically, you need $10,000 a month. You already have $5,000 covering that. Well, where does the other $5,000 come from? And that's when you start going down the rabbit hole of, okay, well, I can take X amount of savings until that runs out. I can pull from my brokerage account. I can sell some cryptocurrency. It's really whatever you can pull from that's not a retirement account. So right now, you just really want to put a lot of emphasis on, okay, where can this money come from? And I'm often asked, how much is enough? Well, like every answer in finance, it depends because everyone on this webinar is in a different phase of their life. They all have different situations. They might be single, they might be married with kids, they might be married without kids. So it really depends. You might be the breadwinner, you might not be the breadwinner. So this is a general guideline, but also too, there's not everything that counts can always be counted. So look at it from a peace of mind standpoint too. And I really put an emphasis on, okay, well, you might only need 9 months, but if you are risk averse and you're pulling from a brokerage account, well, you might as well go the full 12 months. Again, peace of mind. This is a stressful situation for you. We want to transition as smoothly as possible. So I generally don't like reading from the slides, but I just feel like this is so important to emphasize is that safety over speculation. So what this chart is the S&P 500 over 2025. And what you see here is in April, you saw a 15% drop. Why am I bringing this up? Is because if you're in a situation where you're pulling from a brokerage account, so that could be non-retirement assets that you invest on your own. It could be RSUs, so you could have 100% company stock, so Amazon, American Tower, Apple, wherever you're working. So, and remember, Individual stocks have individual risk. So the market could be down 15%, but your stock could be down 30%. And then, of course, with crypto, you can lose 50% just as fast as you can make 50%. In this situation where you're potentially living off this money, there is more risk than reward than keeping it invested. So, what I'm saying is that you see here on the left-hand corner, if you sell here, well, you're not going to get that 15% drop. But of course, you're going to miss that upside on the upswing. So, you want to look at it from a standpoint of, okay, I know I'm going to miss out on the opportunity cost of the upside, but the downside generally causes more damage if you sell low because you're not going to have the opportunity to recover. In short, it's easier to prepare than repair. So you really want to play this as conservative as possible. Sorry about that. So some tax traps of unemployment. So this is the Debbie Downer part of the presentation. Again, I told you that at the top, but I'm going to loop severance and RSUs together. So on those two, there's a 22% flat withholding. So why is that an issue? Well, if your effective rate is 30%, well, you have that 8% delta that you have to make up, and you want to budget that in. Oftentimes, people with RSUs are always asking me, why do they have such a big tax bill? That's why, is because there's a flat tax rate that doesn't apply to everybody. With to piggyback on that, unemployment benefits, oftentimes people do not withhold taxes because they want as much money for themselves. If possible, I always recommend to withhold taxes because you don't want to be behind the eight ball come next tax season where you're going to have to owe money. So you want to get ahead of it as much as you can. The same with capital gains. If you're selling from your brokerage account and you have a gain, you're going to owe taxes. How much you owe in taxes depends on your income. So you just want to prepare for that. And if you're just sell enough for taxes as well, because you don't want to try and make it up later because you could be in an issue next year when you're filing your taxes. For those more sophisticated traders, just watch out for wash sales. If you sell something and take a loss, you have to wait 31 days to purchase it back. And then 401k loans, this is very important. So the loan that you took from the account is going to be considered income. And what I mean by that is that hypothetically you have a pre-tax, so you defer the taxes, 401k. You took a $20,000 loan. If you're not able to pay it back by the next year that you file your taxes, you're going to be taxed at your federal rate and the state rate. And if you're under 59 and a half, you're going to get an additional 10% penalty. So you want to account for those taxes if you have a 401k loan that you can't pay back. If you have a Roth 401k that you took a loan on and you're under 59 and a half, the 10% of penalty will apply on the earnings, and the earnings on the loan will be taxed at income rates, but the principal will remain tax-free. Retirement accounts. So I just want to cover this on people are always ask me, can I leave it with my current provider? Yes, you can. So you can leave it there. It's the status quo. You have the limited investment options, but it's what you know. Some people like that being comfortable with that platform. You can move it to an IRA. And if you do that, just make sure that you make it payable to whoever the custodian is. So that could be Charles Schwab or Fidelity. So if you request a rollover check, just make sure that it's made payable to Fidelity or Charles Schwab or whoever holds the IRA. And to back up a second, you do not want to use these funds to help with the transition unless you absolutely have to. This is for future you, and you don't want to have a negative effect on because the compounding is how these accounts grow, and you don't want to take from it. Also, too, for those who have after-tax money, you just want to make sure that they distribute different checks. So you don't want to mix your pre-tax and your after-tax money to avoid any type of double taxation. Health insurance, I do want to just touch on this on a high level. So COBRA isn't always as bad as everyone makes it out to be. It's more expensive, but it's what you know. So you're in your network, your doctors, you understand where you can go, where you can't go. I would definitely recommend checking out the prices on the marketplace. Generally, those are a little bit cheaper. But again, I would just compare costs and then the pros and cons of moving. But the thing that I do want to focus on is the nuances on your FSA and your HSA. So on FSA plans, it's use it or lose it. So you have 60 to 90 days from termination to spend all of your money. So if you're within that range, you want to spend immediately. On your HSA, you want to, this is portable, but you can use it for the premiums on both of these plans. So if you stay on COBRA, you can take money out of your HSA and pay the premiums. For Marketplace, you have to be receiving unemployment to be able to use your HSA for the premium. So that's the one nuance there. So be very careful on that front. Last but not least, life insurance. You have 31 days to convert without a medical exam. Why is that important? Hypothetically, you're covered, you had a stroke, you're uninsurable. Well, you want to maintain this policy. So you want to make sure that in that 31 days that you're able to hold on to that policy. And of course, anyone else that has life insurance, has kids that needs to have that replacement income, it's recommended that you keep it as long as cash flow allows for it. And just to be clear, this is your supplemental insurance. Unfortunately, the group insurance that your employer was paying for, that goes away. The last piece on the insurance is that once you receive new employment, you want to check the rates. Generally, the rates when you're in a group rate is going to be cheaper. So at that point, if it is, you'd want to hop onto that life insurance policy and drop the one that you carried over from your previous employer. Closing thoughts here. The advice that everyone says was the best one that they got that they never took was to take some time for themselves. So I really hope through this entire process that you're able to do that. I know it's much easier said than done, but I always like to pass that along, and people always respond back, say, you know what, Joe, I'm just so happy that you said that. I got some in there. It wasn't easy, but it was totally worth it. I know there are certain topics that I'm sure that you wish that I went into more detail. If that's the case, I encourage you to shoot me an email. My email address is right here, or schedule some time with me if you just want a sounding board on some of these different topics. Or again, if you feel like it would be better just to talk things out, don't hesitate to put time on my calendar. I generally do about 2 free consultations a week. So availability is a little bit limited, but again, I want to help in any way I can. So please don't hesitate to reach out. So I really hope everything was helpful today. I know we did a lot over a short period of time, but I hope this relieves some stress of the transition. And again, do not hesitate to reach out to me if I can help in any way. Thanks again, and best of luck during this transition.